Hello and welcome to the Kenshu Q3 2017 Digital Marketing Trends webinar. Over the next hour, we will be speaking about some of the trends we are seeing across the search and social advertising ecosystems. We'll have some deep dives into where advertisers are spending their money and a little bit on how as well. We look forward to presenting this with you today. A few housekeeping notes. Obviously, you know by now you need to use your computer audio to listen to the webinar. There's no landline or regular phone line dial-in. You can submit questions. There's a Q&A box at the bottom. If we have time at the end, we will try to get to them. We hope to get to them. If not, we may follow up with you afterwards. I am your host. My name is Chris Costello. I'm the Senior Director of Marketing Research here at Kenshu. I'm coming to you live from Chicago, where for at least 5 more days, we can call it the home of the reigning World Series champion Chicago Cubs. I don't think I can say defending champion. They stopped defending it the other night in epic fashion. Anyway, I digress. Our actual agenda today here is we're going to start with some higher level insights, just kind of the things that we've cherry-picked out of the numbers that we've been looking at for the last couple of weeks. We'll then talk about kind of the more bread and butter global trends that we're seeing across social and then across search. We'll speak briefly about emerging publishers and channels. As many of you know, we are starting to operate with some of those as well. And then, like I said at the outset, if we have time, we'll take some questions. So, first, the industry insights. And before we get into that, a little bit about how we pull this data. This is search data from all the major engines. We include Pinterest in as a search publisher, as many people in the industry are kind of coming around to. For social, we're looking at Facebook and Instagram primarily, and a little bit of Snapchat data as well. This report covers from July 2016, sorry about the typo, through September 2017. So it's 5 quarters ending at the end of September. The way that we approach year-over-year numbers is a little bit of a hybrid where we do enforce same-store filters. So you have to have 5 consecutive quarters of spending if you were above a certain overall spending volume, because that's where a big fish coming in and out of the pool can really kind of mess up the overall trends. We want this to be more about the industry and not so much about Kenshu. Below that point, advertisers can come and go in and out of our sample. And as a result, we've got about $7 billion in total spend that we're looking at as part of this sample. We normalize volumes. We're not in the practice of saying, hey, we had this many clicks or this much spend in this month. But we will then index all those numbers. So you can always say, like, hey, that's 1.6 bigger than when we started in the analytical period. We also adjust for fluctuations in currency, and that's because, as you get volatility in currency markets, it can have a big effect on year-over-year numbers in particular. So those are the ground rules. Now let's get into some of the data. One of the key areas that we've been looking at over all the time that I've been doing these studies is the growth of mobile. And mobile acts a little differently across social and search. You can see here from this chart that social growth in spending for mobile was up 63% year over year compared to 34% for search. A lot of that is that social has been, A, social is growing faster in general, and B, social has always been very mobile forward and majority mobile, as you can see by the share of spend in the darker green bar there. 76% for social in Q3 of this year compared to 44% of spend for search. That search number's been growing. We'll look at that a little bit later. One thing to note here is we are talking about smartphone only. In the past, we've just because of the way the data looks, we've had to group tablets in with smartphones for social, but now we're able to see that difference. So this is now a bit more of an apples-to-apples comparison between the channels. Another area that we've seen a lot of growth, it's been a big area of search, and over the last, say, 18 months or so, it's become an increasingly important part of the social experience, are product ads. Now, when we say product ads for social, we're talking about dynamic ads for products. I know they've tweaked that name a little bit over time. For search, we're talking about shopping campaigns, and that's across both Google and Bing, who offer that particular ad product. And what you see here is that social's been growing very quickly, relatively speaking, to the point where now, at least among e-commerce advertisers, the total share of spend is comparable across both those channels. You see social's now up to 34% of e-commerce spend compared to 36% for search. So this is a story about social reaching parity with the more dominant channel for this type of advertising. And it does speak to how you as advertisers and agencies who are on this call have recognized that, hey, we know how this stuff works from how we worked with it from shopping campaigns. So yeah, of course we want to do it in social. Let's get this ball rolling. Another area of social that we've been tracking over time and has generated a lot of interest in the media as well is video. Now, what we're talking about here is video ads. It's not necessarily video content on Facebook. And so this behaves a little differently. When people talk about the long-form video and the watch tab, that is kind of a different beast than what we're talking about. We're talking about the interstitial to your news feed, and that they pop up within your news feed, the short video ads there. And here we've seen pretty steady growth. We saw, if you look at the spending line on top of the chart here, you saw a bit of a spike in Q4 as we saw e-commerce get really heavily involved in video, and we saw political spending also bump up at that point last year. But year over year, we've seen 130% growth in spending on these ads, and we see that share slowly inching up at this point. It's kind of found its level within social to be about 1 out of every $4 spent on Facebook is going to video advertising, and that's we'll see how this goes over time. It looks like it's settled in, so we don't anticipate any large disruptions to how this goes. We typically don't expect the large disruptions that we wind up with on Facebook anyway. They tend to hit us, and then we have to figure them out later, as an analyst at least. The other thing that's been happening in social that's really interesting is the growth of these carousel ads. These are multi-link posts. They have multiple clickable elements within them, and as a result of that, structurally, they're a little different from traditional ads, where you might like it or share it. They may be trying to get you to click through to their actual URL and domain, but carousel ads have more things you can do with them, and each of those clickable elements counts as a click against the impressions. So you can see from Q1 of this year, the click-through rate for this ad type really starting to take off. We'll look a little later about what the impact of this is on total volume of clicks. But you can see just the impact on overall click-through rate for social, which is the heavy kind of turquoise-ish line there that's poking up around 2% for the quarter. Speaking of ad types that affect overall click-through rate, we've seen this on the search side as well. Many of you are well aware of the transition from the old legacy style of keyword text ads to the new expanded text ads, or ETA, format. And this is a mandatory change. You're not allowed to introduce new ads in the old format anymore, but it's still not quite at 100% of volume. We see here that it's getting up above 75% of total clicks for keyword search. This excludes shopping campaigns in Q3, and you see the impact that it's having on the click-through rate of the overall text ads. These, first of all, it gives you an opportunity to refresh your copy, which tends to increase click-through rates in general, but it also takes up more real estate. There's more transparency with the landing page URL. There are many different elements that encourage consumers to click on these ads, and we're seeing that borne out in how it has affected click-through rate over time. We see that overall click-through rate now up to 5% on the quarter, which is the highest we've seen, certainly in these last 5 quarters, and probably previous to that as well. Another thing we're seeing in search is additional volume of shopping campaigns. This is something we started to track last quarter because one of the things that it's doing is, particularly around mobile, it looks like there have been additional inventory units added to mobile shopping. And when you consider that shopping campaigns have lower CPCs than overall search and mobile search has lower CPCs than overall search, the impact of that is to, show this downward trend in overall, here just the shopping campaign CPCs, but we'll later see the impact on overall search CPC as well. And the point here is that as you add more inventory, it's going to be valued less than the existing inventory. It's typically going to be below or to the right in the shopping case from ads that are already there. So as a result, those are going to be at a lower CPC. And so even if your top line, if your best ads are still at the same CPC, you're going to see that overall number start to come down. And that's what we're seeing. So those are kind of the high-level highlights that we picked out for you. Now we want to get a little bit down in the dirt. We're going to start with what we saw in social. The highlights here, and if you have already seen the infographic that we published on Wednesday of last week, you've perhaps memorized these, perhaps not. We've seen increases in CPM, cost per 1,000 impressions, over the last 2 quarters. And what these are likely the result of is a decline in right-hand column desktop ads. These ads have very low CPM. They also have very low CTR. And even if nothing else happened, this would affect the unit pricing of an impression. But we're also seeing the addition of more highly targeted ads, more interactive ads, and that's then also affecting these numbers. Which brings us to the second point, which is, as we saw already, carousel ads are increasingly the norm, particularly for dynamic ads across product and travel and even now real estate, and they're talking about some other areas as well. So you've got this big increase in these highly clickable ads, and then you've got, as we saw in the previous point, these lower click-through ads going away. So it results in kind of amplifying the effect of this social click-through rate in the trend that we've seen over the last several quarters. And then just, one of the things I think we all have internalized and we kind of know, and that is that the mobile news feed pretty much dominates the social ad landscape. It's 2/3 of total ad spend in, that should be Q3 of 2017. And, that's part of, we see this move away from these right-hand side ads. We see there are some other individual placements that we'll see that are a little more specialized, but the bulk of social that we talk about now is the mobile news feed. So how does that look in terms of the numbers? Here you can see the trends for your volume metrics of impressions, clicks, and spend. We see impressions go down by 7%. We're going to talk about that in a little bit. We see clicks up 33%, which, again, we talked about carousel ads. That's going to be the likely suspect there. And the net result of all of this is we've seen year-over-year spend increasing at a rate of 41% over Q3 of last year. It's up about 13 from the previous quarter. That is consistent with what we've seen in the last quarter in Q2. So it's a pretty healthy stat in terms of the overall growth of social advertising volume. Once we get into the derived measures off of those metrics, you see, as we were talking about before, that click-through rate up 46% year over year. That is a dramatic increase. And likewise, at the bottom, you see that CPM up 53% year over year, up to $5.69 per 1,000 ad impressions. On a CPC basis, things are a little more measured, a little more stable, and that kind of speaks to the fact that the new normal in terms of click volumes across these and the valuation of those clicks across these ads has been actually fairly consistent. So drilling down into that CPM increase, here we see it broken out by computer versus smartphone. I left tablets off of here just as not to muddy the waters, and that's why that purple line is a little bit higher than the other two in Q3. But really what we've seen here is that desktop CPM is more than doubled. That is a big part of why we're seeing that dramatic increase year over year at the overall level. If we look only at mobile impressions, it's only a 14% increase, so a little more reasonable. It's not, when we look at the stat I just threw out about 2/3 of spend being on the desktop or the mobile news feed, that bread and butter area of social has only gone up about 15% in terms of or 14%, excuse me, on the pricing. So that seems a bit more reasonable in terms of what we would consider to be the inflation in this space. And similarly, if we look at click-through rate, we see that the blue line at the bottom for desktop really picking up in Q1. Some of that is carousel ads, but the carousel ads also affect the mobile line as well. But that increase on the desktop for click-through rate is also because you're taking away those low click-through ads. They're just not there anymore. And if you want to see what that looks like in terms of impression volume, we've got a stacked bar chart for you, or stacked column chart, excuse me. I wouldn't want to mislabel these. But you see in Q3 of 2016 that second chunk makes up 37% of the total of impressions. But then if you look at this year, it's much smaller. It's made up only 13% of the total as well. So again, a dramatic drop in just, in terms of numbers, if you're looking at the main social desktop screen, you may have seen 4 of those ads before, and now you're only seeing 2. That's the magnitude of the change that we're talking about here. We've seen stuff like this before. There was like a year and a half ago, maybe 2 years ago, when Facebook was really all about the right-hand ads, and then suddenly decided, no, we're about the news feed now. We saw probably an even more dramatic drop in the impressions, and then these ridiculous, like 400% increases in click-through rate. So we've seen this before. This is kind of like the last throes of the right-hand column ad in a lot of different ways. And just to show you how that impacts CPM, just a little bit of a thought experiment, word problem. If any of you are preparing for your SATs, if you've got 10 things that cost $1 and another 10 things that cost 10 cents, your average cost, you've got 20 things and $11. So that's 55 cents for your average cost. But if you lose 9 of those 10-cent items, and even if you get one more of the dollar item, then you've got 12 items total. You've got $11.10, so your spending has gone up 10 cents, but your average is now all the way up to 93, even though your spending is almost exactly the same. And I apologize. It was my understanding there would be no math on this exam, but that's kind of what we see on the social side. It's the reduction of low-priced inventory that is really having the biggest impact on the overall pricing. And another way to look at that would be to use a bubble chart. This is the cosplays with visualization parts of the program, where you can see here that the mobile feed, the purple bubble, and the desktop right-hand column, the blue bubble, are both about the same size in Q3 of 2016. And you see how that nets out for where the overall CPM is for that kind of, is that teal maybe? No, I think it's more of just a turquoise. But then what happens when we fast forward to this year, that desktop right-hand column has gotten much smaller. So if you think of it in terms of, gravity, essentially. It's like the gravity is pulling that total further to the right along the CPM axis, because the volume of desktop right-hand impressions is reducing, is getting smaller over time. And the bubbles here are the share of total impressions, not the actual volumes. You'd see something similar with the volumes as well. So what happens if we take those out? We already looked at mobile versus desktop, and we saw that 14% increase. If we just take out these right-hand column ads, we see similar CPM increases, where it's only 15% for CPM, and then also only 6% for click-through rate, compared to 53% for CPM and 46% increase for CTRs. So things look a lot different when you focus on where most of the action is. By comparison, these desktop right-hand column ads only accounted for 8% of the total social spend last year, and that's when they were making up 37% of the total. So the impact on the overall trends gets a little bit distorted just because of the impression volume, but you can see what the effect is of taking these out. And for marketers, this is important. If you see your CPMs going up and you're concerned about that, this is one of the ways that you can then drill into that data to try to understand the apples to apples nature, to really get at what it is that is driving that increase. Is it competition? Is it inflation? A lot of people talk about ad load. Well, actually, it's kind of the inverse of ad load. It's inventory being taken away, but it wasn't anything that we were hitting some kind of ceiling. It was just less lucrative or less valuable inventory. So that's kind of the deep dive on what we're seeing with CPM. Getting back to just that mobile versus desktop split, if we just look at mobile growth over time over the last 5 quarters, we see smartphone-only spending growing at 63% over last year. We actually looked at that on that earlier slide as well. And clicks and impressions are up 51% and 43%. So we're seeing pretty consistent growth over all of these. You see a little bit of an increase of impressions in Q4. Actually, a spike up of everything in Q4, but that's to be expected with the seasonality of digital in general. In terms of the share of total, we've also seen an increase over time now that we're looking at just smartphones. I think if we included tablets, it's a little less pronounced. We do see quicker growth in impressions, but that, again, goes back to the fact that we've taken away a lot of desktop impressions. So that's why we see that blue bar on the left growing faster than the other two. I want to come back to something I talked about earlier about the impact of these carousel ads on overall click volume. Similar to what we looked at with the stacked column chart for impressions, where we looked at the right-hand column, this is what happens if you just split it by carousel versus non-carousel and look at clicks. So you can see that the size of that green stacked column, that's the entirety of click growth for Q3 of 2017. That's where all the growth is coming from. And that's typically for 2 reasons. One is just growth, natural growth of the ad type itself, and you also see advertisers who are getting more focused on engagement, getting more focused on clicks and interactions with those ad units, are going to be switching out. They're going to be substituting, low engagement ads for higher engagement ads, and so that would be why the blue bar is declining. You're going to see, if you've got these high engagement ads, you're going to use those where it's most appropriate. And then again, just to repeat what we saw before, the difference in the click-through rates between those 2 types. So you see just that really strong growth. Carousel ads were already better in terms of click-through rate, but starting in Q1 of this year, we see that rapid acceleration as more and more advertisers are availing themselves and kind of figuring out how to tune those ads for better engagement. Another area, we talked about product ads on social, but there is a broader category that is just dynamic ads in general. For the purposes of this presentation, this is still primarily dynamic ads for products, but we do have some dynamic ads for travel in here as well as we support those. Real estate, I don't think, is in the mix yet for Kenshu, but I'm sure we're working on it. And we see here that big growth in clicks. And that is because these are overwhelmingly in that carousel format. So you see, a tripling of click volume year over year, 199% growth. And so that's the big story here, is that dynamic ads equal more engagement, equal higher click growth. So if your click-through rates are going through the roof, then this would be something you would want to investigate to better understand why your program is doing that. As a share of total, no real surprise here. The only real question is how high can it get? And for all advertisers across Facebook and Instagram, we've seen this reach 53% of all social clicks are now coming from this ad type. If we look at e-commerce advertisers, which, as you remember, use a lot of dynamic ads because of the dynamic ads for products format, that share rockets up to 74%. So definitely dominant in terms of where the clicks are coming from for social advertisers. And just, those of you who are familiar with how Facebook works, it's not always clear what click means. Within their lexicon, what we're talking about here is clicks all. So those are likes, those are shares, those are posts, and those are also interactions with the clickable elements within the ad. And there are many of those, as we spoke to before. So structurally, it kind of has an unfair advantage over other ad types when you're looking at click-through rate, which is another thing to consider when you're looking at your own program. A little bit about CPMs for these ad types. We do see a bit more of a stable CPM for dynamic ads than we do for the other ad types. The other ad types obviously are being disproportionately affected by the right-hand column ads that we saw before. The other thing we see here is that price premium in Q4 of last year for these ads. Obviously, we've got the holidays coming up. This is something we would expect to see happen again over the next month or two. We expect to see these ads get more expensive. In terms of click-through rate, just kind of beating a dead horse here at this point, dynamic ads in large part mean carousel ads, and increasingly so from Q1 of this year, where you see that blue line on top just kind of take off and pull up the purple line with it. So as in terms of what we'll see from this in the future, there are a lot of ways this could go. Have we reached a saturation point with it? Have the advertisers who are going to switch over to this done it as much as they're going to do it? What is the impact of dynamic ads for travel on this? We could see this. There are still scenarios where we could see this increase in terms of the impact on overall click-through rate, because as this becomes a bigger share of the total, we're going to see that purple line grow and bend upwards as well. Another area within social that is of particular interest is Instagram, the Instagram environment within Facebook. And here we've seen fairly steady growth over the last 5 quarters. You see a little bit of a disproportionate bump in Q4, so we expect to see some of that again in the next 2 months. But we see 2.5x what it was a year ago for overall Instagram growth, and we're seeing that share, the green line on top, is over 10% of total spending. So that is pretty healthy growth that we've seen from this format as more and more advertisers avail themselves of it and kind of figure out how to make it tick. Again, we do expect to see a little bit of a bump in the next quarter. Some of that in terms of spending is going to be because Instagram does respond to the seasonality as well. You see that spike last year at Q4 of 2016. You see the gap between that premium. We've always reported this premium for Instagram CPMs versus other social ad types, but you're seeing that start to narrow as the core Facebook experience is, it's like who's driving the train here. It's like the experience from Instagram is filtering down to Facebook mobile, which is then filtering down to desktop in terms of user experience, where you don't have those extraneous right-hand ads and so on. So we're starting to see a bit of a convergence on the CPM front as a result of that. And because it's Facebook, there are more things that are going to change in ways that are kind of hard to predict relative to the numbers here. We have collections that are a thing now, but typically not enough volume for us to speak to. Actually, 3 of these we have data on, just not enough to really say much. We've got collections. You've got messenger ads, which are something that Facebook themselves have been talking about a lot and for a long time. You've got Instagram stories, and I think I kind of buried the data point a few slides back, where about, I think, 6% of Instagram impressions and 10% of Instagram spend, or vice versa. Here, I can go back to the slide. It's on the slide. Right, so 10% of Instagram impressions and 6% of Instagram spending in Q3 were coming from Instagram stories. So out of these elements that we're looking at here, that's probably the one we'll have more data on sooner, but collections and Messenger are well on their way. Facebook Watch is also going to be, if you pardon the expression, one to watch, just because they're really trying to think about long-form video, and long-form video is more conducive to something that's a little more traditional in terms of the types of commercials you'd see on TV. So it's more from a user expectation point of view. You might be able to do more with video ads in that environment than you can in a scrolled news feed. Watching videos in a scrolled news feed is a challenge, certainly. I mean, it's one that the industry seems to have risen to, and as a result, we've got that $1 out of every $4 going there. But there's more that could be done with it. So we're keeping an eye on all the watching puns are coming out now. So, but that's something we'll definitely speak about as we see more of it in the future. So that's what we have on the social side. Now we're going to go a little bit into a fair bit into paid search and see what's been happening there. The headlines we've seen here is really just slow or steady growth. I think maybe like 3 of the last 4 quarters we've reported the same year-over-year spending growth for search. So in this case, for a market that's been around for this long, and in internet years, search has been around forever now. That's good. That's steady. No major disruptions one way or the other. So we like that. But we are seeing some changes within that. We're seeing expanded text ads and the impact those are having on overall click-through rates. We've seen changes to shopping campaigns, additional inventory coming in there that's driving a lot of volume growth in search, but it's really kind of pulling down the overall CPC trend as well simultaneously. So what does that look like? Here again, we see your volume metrics. The bottom right corner is the one I spoke to earlier. We saw year-over-year spending growth at 10% over what we saw in Q3 of 2016. We see clicks growing faster than impressions. For the math majors out there, that means click-through rate is going up. And we see modest increases quarter over quarter. Q2 to Q3 is kind of a bit of a slower period, particularly if you're direct response focused and e-commerce focused, kind of saving up for. You do have you've got back to school, you've got dads, grads, and moms, dads, and grads in Q2, but it doesn't have the impact that Q4 does. So tends to be a little bit softer and a little less dynamic as a result. The derived metrics here, you see your click-through rate has increased about 8% year over year. That's across both keywords and shopping campaigns. And you see that CPC slowly trending downwards. It's down 16% year over year. And we'll get into that in a little more detail as well. For mobile, across all of search, we already saw that 34% spending growth year over year. Impressions were up 61%. Clicks were up 62%. So we see, and this is what you would expect. If CPC is trending downwards, then clicks are growing faster than your spending bar. As a share of total, for those of you who've been following this stat over time, clicks crossed the 50% threshold, I think, in Q4 of last year, and then impressions followed suit earlier this year. That's still the case. Clicks and impressions are both over 50%. Clicks, in fact, are 3 out of every 5 search ad clicks are now on a smartphone. And spending continues to march up there. It's up to 44% now, closing in on half of all the search dollars in the space per quarter. In terms of CPC, you see that mobile line at the bottom. As mobile becomes a greater share of the total, that line has more impact. It's the gravity thing again, and we'll look at another visualization of that a little bit later. But you do see a little bit of a decrease on desktop keywords as well. Tablets are kind of their own thing. They're still a very small piece of the overall pie, so they don't have a huge impact on the overall numbers. Moving over to our other favorite search topic, and that is shopping campaigns, you can see that impression volume for this type of ad has nearly doubled year over year, 94%, and that's growing much faster than clicks at 71% year over year, and then also spending at 40% year over year. You can also see we still haven't come back to the levels that we were at in last holiday season yet this year. So we would expect that number to be bigger than the bar we saw last year when we get into Q4. So it's going to be a substantial increase quarter over quarter for sure. And then if you look at the CPCs broken out by this type, you see that shopping campaigns are typically priced lower per click than keywords, but are also more sensitive to seasonality. Regular keywords, we didn't really see that much of an impact at all on Q4, but shopping campaigns made up for it by seeing that 10 or 12 cent jump that you can see there. So we expect that to increase as well. Here it's a little less clear if it will get back to the levels that it was last year, given that it's coming from a lower baseline. So that's something to watch as we go into the fourth quarter. Now, if we take both of those things and we try to get at what's going on with CPCs, and you break it by both device and by type, you can see that neither desktop keywords nor desktop shopping campaigns really changed year over year. There's some movement on desktop shopping for sure, but the starting point and the end point are pretty similar. So what that means is when you look at overall desktop, it just means there are more of those desktop shopping clicks. So it's a bigger percentage of the lower price that's driving that overall desktop line down. And on the other hand, you see both keywords and shopping campaigns on mobile are both declining in terms of overall CPC. So if we put that back into our clever little bubble chart format, you can see a bit of a stretch in terms of CPC across all these different types. And you've got desktop keyword pulling it higher and mobile shopping pulling it lower overall. But then looking at the change to the next quarter, that mobile shopping bubble has gotten bigger and a little bit lower, or a little bit further to the left. And so that pulls the overall CPC for search, which is still pretty close to the overall CPC for mobile keywords in general. That's kind of the bellwether here. We see the impact of these different types on the overall thing. It's essentially a flip chart at this point. You can just kind of like toggle back between these two and you see where they move. So those are the overall trends we've seen for search. Now we want to talk just a little bit about some of the emerging channels and publishers. If you have followed our website, you've seen some of the announcements we've had over the last couple of years in terms of supporting Snapchat, supporting Pinterest, and the new Kenshu e-commerce product. Just want to talk briefly about each of those. Pinterest, we've had probably the most stable data over time to be able to talk about how things have been moving since that announcement. And there we've seen total spending doubling since we went for a general release with that in January of last year. So we've seen some substantial growth there, double in spending over just 3 quarters. For Snapchat, the first wave of API partners, I mentioned this last time around, was in Q4 of 2016. We were a part of the second wave in Q1 of 2017. There's not a lot of data yet for us to speak to here. And if you want a good deep dive into the development of Snapchat as an advertising channel, there's a recent article from eMarketer that gets into a lot of how that has shaken out with the challenges with creatives and approval processes and differences in formats from other things, and how Snapchat has been working to help advertisers solve for those problems. It's a fundamentally different format and experience than a lot of what we're used to as digital marketers. So as a result, it's been a bit of a learning curve. I think everyone will own up to that. But this article goes through most of the issues there and does it rather nicely. For some of what we're seeing with the Amazon ecosystem, typically a lot of the interest right now is around the sponsored products that we see on the left that are targeted by keywords. They appear below the search results. Also, you see headline search ads and product display ads. These are, definitely an area of interest for a lot of people within marketing and a lot of people within e-commerce, and something that we hope to report on in greater detail in future webinars. But it's just something to keep in mind as things move forward. And that's kind of all of this is informing what we see as our 3 pillars of channels here, which the traditional search and social channels, but then also this emerging e-commerce world where it's within the confines of places that you're shopping already, as opposed to channels that are then helping or kind of external to the shopping experience, but part of it nonetheless. It's kind of more of the dedicated channel play, and we expect to see a lot of growth over there over the next, certainly the next year and beyond. There have been some very bullish predictions as to the advertiser spend that's going to go into that. So that brings us to the end of our prepared content. I don't know if we have any questions. You can once again click the Q&A button if you've got anything you'd like to ask at this point. Excluding World Series predictions, I'm still in mourning after the Cubs got bounced out. Didn't really plan for any intermission music while we waited. So far, it looks like we don't have any questions. So I'm going to give you all 15 minutes of your day back. Before I do that, I would be remiss if I didn't point out that we do release an infographic every quarter. You can find it at kenshu.com/digital-marketing-snapshot for the most recent one. We have other insights, other case studies that are on kenshu.com. There's a blog there that is posted to regularly. There's an article that just went up about search showcase ads that you should check out. But I think that's all we've got. And without any further ado, I would like to thank you all for your time. Please join us again next quarter, and have a great day, great weekend, and a great Q4, because I know that's going to be a busy time for a lot of you. So long, everybody.